Here in studio at the stock exchange. Equities are fractionally higher this morning after Wall Street digested delayed economic reports yesterday and the government shutdown. The non-farm payrolls report data showed a cooling jobs market, but not one worsening enough to lead to expectations of a rate cut next month. The central bank will see the December jobs report before its next rate decision on January 28th. Here at the NYSE, tax advisory firm Andersen is set to ring the opening bell to celebrate its IPO. The company, which will start trading later today under the ticker symbol ANDG, raised $176 million after pricing its IPO at $16 a share. Let's take a look at what's on tap today. We'll have extensive coverage of Andersen's IPO celebration throughout the hour, including exclusive access to the firm's executive remarks, plus a one-on-one interview with the CEO, Mark Vorsatz. And of course, we'll take you live to that opening bell at 9:30. Elsewhere, Yahoo News is using AI to create a new way for consumers to get their information. An executive will join me to share details of its Your Daily Digest offering and how it fits into the company's broader vision. Plus, executives from across the fintech space gathered at Money 2020 USA in Las Vegas earlier this year. A pair of leaders told us how they're helping clients move money around the world. Let's start though with the markets, as we always do here on NYSE Live. We see fractional gains at the open. It is the final full trading week of 2025. And joining us smack dab in the middle of that week is Kenny Polcari, partner and chief market strategist at Slate Stone Wealth. Kenny, it's great to see you.
It's always great to be here, and it's great to be with you.
Yeah, thank you so much. So let's talk 2025. We're coming to the tail end. How is it looking?
Well, so I think it's going to churn right in here, right? I think there's going to be a little bit of back and forth. I think we're going to find support at the trend line, and we're not going to really break through the recent high at 69.20. Volumes are going to start to subside, and moves can be amplified and exaggerated because of the lower volume and because of the technology. But one way or the other, I think we're going to put a solid year and end about right here.
Okay, and how does this set up 2026?
Look, I'm very bullish on 2026. I think the first part, we might hit some volatility. It's a midterm election year. There's lots going on. All the House seats are up for grabs. And so there's going to be maybe some concern about, who the new candidates are. Where do they stand? Are they left? Are they right? Are they in the center? It might create some short-term chaos and volatility in the first part of the year. But look, then we're going to get the big, beautiful bill is going to kick in. The tax cuts are going to finally kick in April when people start getting tax returns back. All this CapEx spending is going to I think it's going to prove out to show its face later in the year, like in the second half. And then I think it's going to be a great year. I'm very bullish on 2026.
And we've started to see a rotation at the end of this year. Of course, that high-flying AI trade since April.
Right.
Starting to see some rotation into more cyclical sectors. What does that mean?
Well, it makes sense, right? Because we've been talking about the AI sector. Some people think it's a bubble. I don't think it's a bubble at all, but do I think it's a little bit stretched? I do. I think there's been lots of positive news about it. I think everybody wants in, and so therefore I think it's stretched. So what I think we're seeing are people just taking a little bit of money off that table. They're not getting out of that trade, but they're taking a little bit off that table and they're reallocating. Look what look what sectors have started to heat up. Healthcare, which was really negative all year, was flat. It was kind of dead money just until a couple of months ago. And now it's up 12 or 13% year to date. It was down 10%. So it's made a 23% turn in itself later this year, right? Look at the basic materials. Look at financials are starting to outperform. The industrials are starting to outperform again. So I think it's very bullish in terms of the tone it's sending for the markets.
Now, I do want to talk about the Fed rate path, right? Because markets not pricing in a January rate cut for now. What do you think is the right course of action for the Fed?
So I was in the camp that they should not have cut last week. I thought we were fine where we were, but nobody listened to me and they cut anyway. I don't think we're getting a January cut. I don't think we're getting a March cut. I think Jay Powell is now going to ride this out until his term expires in May, and then let the new chair, whoever it is, Kevin, come in and make a decision right now. Unless the data suddenly starts to spin out of control and falls off the edge, that's my thesis, right? Now, if we start to see in January and February suddenly the data gets really bad, then I suppose March is back on the table. But right now, my plan is, or my thought is, that we're not getting a rate cut at least until the new chair takes place. And then again, I'm not even sure we need it because look, we're at 3.5, 375, which is well within what's the normal range. I don't think it's restrictive at all. I think it's becoming to be a little bit supportive, meaning I think you have to watch out for inflation. And we're going to get that call tomorrow with the CPI, which is going to tick a little bit higher.
Okay, so let's talk about the dual mandate, right, of the Fed. It's making these decisions based on inflation and the jobs market.
Right.
Inflation ticking a little bit higher, but the central bank did actually cut its forecast for inflation in 2026.
They did. They said that might tick a little bit higher, but then they expected to pull back. I hope that's the case, because what I remember, and I lived through it, many of us lived through it, was, the inflation, the resurgence of inflation in 1980, when the Fed then cut rates prematurely, thinking they had slayed the inflation monster, and then suddenly they reignited it, and it just took off. And we know what that was like. Paul Volcker ended up raising rates and forcing the country into a 2-year ugly recession, something I don't want to see happen, which is a little bit of my concern. If they continue to cut rates, they're going to overstimulate, in my opinion.
Okay, so they also upped their GDP growth forecast for 2026.
Which is great.
At a time, though, when we've seen the jobs market cooling this year.
Yes, but it's interesting. The job market is cooling. A lot of those job losses have been government losses, though, if you notice, right? And there was an explosion of government workers under the prior administration. So you have to kind of just step back for a minute and think, okay, where are the most of these losses coming from? And I think they're mostly coming from the government, so I'm not that concerned about it. But I do agree. I think the Fed, and I think a lot of the street expectations are for GDP to be strong next year, right? On average, maybe we'll grow on average better than 2%, 2.5%. But I think, the first half of the year, we could see 3+% growth at GDP, and that would be very healthy. And it would be healthy for the job market.
We have a tax advisory firm here. Our final IPO that we expect, right, of 2025, Andersen pricing at the high end of the range last night, $16 a share, raising $176 million.
And that's bullish, right? That's actually bullish, because it priced at the high end of the range, which means there's money out there looking for places to go, looking to be invested. So I view that as a positive. Okay,
so I do want to talk about that sentiment. Does that give us momentum in a deal-making environment in 2026?
I think it does. I think it does, but I think there's also the talk of, SpaceX and some of these private companies that are now teasing the markets about either wanting to come public, or at least having those discussions. Certainly SpaceX and Elon Musk are right at the top of that list. And so I think it's setting up to be it's going to be a great IPO year. People are excited about it. I think we should be excited about it.
Yeah.
Look, we're in the middle of this fourth industrial revolution with technology, which has only begun. This story is far from over. And so that's going to carry us into 26 and 27.
Are there specific stocks on your radar?
There are. Because I think the first half of the year is going to be a little bit chaotic, I'm going to lean more towards healthcare. So names like Merck, which I love, and Merck had been underperforming all year. If you look at it on the chart, it kind of formed the base. It's starting to lift its head. It's broken through. That one will continue to do very well. And it's a big mega cap name in that space, and it's a fairly decent dividend payer. So they pay you to own it, and I think it's got great upside potential. That's in the healthcare space. And financials, I continue to like JP Morgan and Bank of America. They are core names that the firm owns that I also own. And so I continue to look at that. And then in the basic materials side, SMIDs I also like. I think you have to pay attention to small and mid caps, because I think it's going to be a great year for that group.
Do you watch cryptocurrency?
I watch it, and I dip my toes a little bit. I own a little bit of Ethereum and Bitcoin and Solana, just so I'm in that game and I can feel it. I'm a little bit disappointed in the way it's been acting recently, but I'm not necessarily surprised, because I think that also got a little bit ahead of itself. And so there's money coming off the table, not only just people that are concerned that it got ahead of itself, but I think there's money also coming off the table that people found themselves in other positions that worked against them, and so they needed to sell crypto to raise some cash.
Kenny, we were talking about Andersen earlier. It is set for its trading debut here at the New York Stock Exchange today. We are awaiting these boardroom remarks that we're going to take exclusively here from the CEO in just a few moments. And of course, this is rounding out what has been a good year for the NYSE. 7 out of 10 of the largest IPOs this year.
I think it's been a great year, and I love the fact that I will say, I love the fact that a lot of these companies choose the New York Stock Exchange, right? After spending 40 years here, it's like home to me.
And talk to me about that price discovery process. What makes the NYSE unique from that vantage point?
Well, because it is the interaction of both technology and human beings at the point of sale on a day like today, when we have that IPO, when it's pricing, and you're going to start to get client interest and institutional interest. The brokers will bring that institutional interest to the floor, to the post where the stock is trading, and there's going to be that conversation between the human beings and technology, and the blending of that will create a very dynamic, exciting opportunity for them.
Yeah, I would imagine, too, for SpaceX, once we do see that go out, right, they have confirmed plans for a 2026 IPO, that event in and of itself could open the floodgates for more deals.
100%. 100%. I only hope that SpaceX takes a hard look and chooses the New York Stock Exchange.
Yeah, I would hope so very much as well. We're still awaiting those boardroom remarks from Andersen, CEO. Of course, we will take you there exclusively. Once we get them, the CEO is going to join us down here on the trading floor after ringing the opening bell. Santa Claus rally, Kenny, you think it's in store?
Well, I think the Santa Claus rally, look, I think we're going to end right about here. So I think the Santa Claus rally has already come. I don't think we're going much higher. But look, if we break through 69.20, which is the all-time high in the S&P, before the end of the year, then expect that the algos are going to push it to 7,000 because it's a big round number. It's a new millennium. It'll be exciting. The algos will do that, but I think it'll be short-lived.
Okay. And I do think we can send things now over to the boardroom. Let's take a live look here at remarks from Andersen's CEO.
And I explained that Kathy had these bells made, and they say 2025. And I didn't want to have the bells made over again. So that's why we're here in December. I would say I've worked with a lot of clients that have gone public. When I was running our office in Silicon Valley in our prior life, I signed off on a lot of IPOs. It's really different when you're doing it for yourself. And I would say one of the things that continues to stand out as a true attribute and character of our organization is the culture. So I would say I said to the bankers at UBS and Morgan Stanley, if I approached your managing directors and they all had vested equity in the firm, and I asked them to unvest 59% of their equity, what do you think their answer would be? Ours was a unanimous vote in support of that, because that is a core about the culture of who we are. Similarly, when I approached all of you about giving our retired partners 4 times the benefit that they otherwise were legally entitled to the point that we actually had to amend our partnership agreements to enable us to do that. Again, unanimous vote in support of that. Well, what that describes to me is an organization that has incredible culture. And when we started this process and I first initiated this discussion with a small group, it was Joe and it was Dan and it was Peter Kasia and Oscar after our 2023 Global Partner meeting. The first reaction was that I felt that I had to get a taser to unstun them because they were all tongue-tied and they couldn't say anything when I said, I think we should go public with the firm. I didn't anticipate the velocity of the consolidation, but my thesis was that global professional service firms, like every other industry, as they continue to mature, are going to consolidate. But as part of that process, what we discussed and what we have discussed as a group of not just U.S. partners, but the international partners are here today, is the reason we're doing this is for our people. It's not about us. Are you all going to make a shitload of money? Absolutely. There's nothing wrong with that. I'm a capitalist. But our motivation for doing this transaction is to make this a better place for the next generation. Our motivation for doing this is because we have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word. You know, Bonnie commented about transparency. I've got to be a little more cautious about transparency because as a public company, we have to be sensitive to those issues. But the reality of it is we are a great team. And I will just tell all of you, other than my best partner who's over there, my wife Liz, and please give her an applause. For all of my partners, I can just imagine you wouldn't want to spend 46 years living with me for a variety of reasons, okay? And when we had the last global vote, most people don't know that unlike the other firms, I actually get elected and reelected by the partners. We did have one global partner last year that voted against me, and I suspect it was probably Liz because she didn't want me to keep doing this. But I will just tell you this has been an incredible honor and privilege for me to serve you all because I'm accountable to you, I work for you, I represent you, and I'm grateful for the opportunity. So thank you very much.
Mark. Mark. Stay up.
We were just hearing there, of course, from Andersen's CEO, Mark Vorsatz. He's going to make his way down with his team to the NYSE trading floor. We'll see him on that opening bell podium at 9:30 a.m. Eastern. Andy will join us for an interview on the trading floor with our Ashley Masternardi before the show wraps. So you'll want to stay with us throughout this hour. Up next, as we count down to that opening bell, we'll take a closer look at Andersen's mission. Stay with us.
At ICE, we aim to solve some of the biggest problems in markets. Often these issues come down to a lack of transparency because a market doesn't have the right technology, data, or systems. We address this by digitizing analog markets. Digitizing markets brings transparency. At the heart of this is our technology. It's the same technology which underpins our trading venues, that powers the New York Stock Exchange, that drives our fixed income pricing, and our mortgage platform. Deep trust in our markets has made us the world's largest exchange for energy trading. Our exchanges price the world's most important commodities, many of which support the shift to lower carbon fuels. In mortgages, we operate across the life of a loan. Through electronification, we're making the home buying process faster and simpler. And through our data, we're bringing new transparency to mortgage securities. We're bringing you powerful, fast technology, access to a depth of market data. We're building liquid markets across asset classes and geographies. And we're listening to our customers every day about what you need.
Welcome back to NYSE Live. As Mark Vorsatz and the Andersen executive team make their way down to our trading floor, here's a closer look at the company's mission and its story as it prepares to list on the NYSE.
Numbers don't just balance books, they build futures. Behind every thriving business, there's a story written in figures. When expert tax advisory, investment strategy, and valuation unlock capital, companies don't just save money, they invest in tomorrow. They hire, they innovate, they lift entire neighborhoods. At Andersen, we don't just crunch numbers. We architect opportunity. We turn tax expertise into economic engines that power progress. Because when businesses thrive, communities rise. Andersen, strength in numbers.
Thank you for taking the time to learn more about Andersen. Before we talk about where we are today and the incredible opportunities ahead, I want to share our story, a journey of transformation that I'm incredibly proud of. In my prior life, I was a partner with Arthur Andersen. When Arthur Andersen liquidated in 2002, there were a group of us in the US, and we decided to start our own business. It also gave us an opportunity to reset the culture button because some of the best attributes of Arthur Andersen were cultural. And we tried to take those best qualities and develop those with our new firm. Investing and training in our people has been a core value.
Building a business model that is based on stewardship, helping our people achieve their potential, is an important cornerstone of what we're doing. So one of the biggest reasons why we're going public is to enable us to achieve our potential as a group of professionals and build a better firm for the next generation.
We've been working with Andersen for over 6 decades. They're a critical and essential component to the activities of the family in both investing as well as estate management. I go to countless numbers of meetings around the world, and Andersen, they are in the room at almost all times when major decisions and issues have to be addressed. And I trust Andersen. In fact, I will not make a major decision without consulting Andersen. The trusts that we work with and the family wealth that we work with is in the billions of dollars.
Over the last 20 years, I've brought Andersen with me through half a dozen companies. The Big Four accounting firms have an inherent conflict between their audit and their compliance practices and their consulting practices. Fundamentally, they end up giving advice that becomes easier to audit and more on the conservative side and tailor-made only for their audits. Andersen's independence and focus in serving complex compliance financial issues puts them apart. Without conflict, they are able to advocate for me and become a trusted advisor. Andersen gives me true, unfiltered, unbiased advice that's better for my company.
Andersen's reputation for service and professionalism and its service businesses, for example, consulting, tax, and legal, attract new partners and clients globally. This reputation has been restructured and enhanced by the partners in Andersen Global. The brand's collaborative culture and global reach are key differentiators, enabling the firm to address complex, cross-jurisdictional client needs by providing support that local entities might lack. So it's a structure that's been built which makes the whole much greater than the sum of the parts.
Numbers are all around us.
Numbers are universal, right?
Numbers tell us everything.
Numbers are the basis of almost everything.
Like, how do numbers not run the world?
It's critical that we are providing quality advice to our clients, that we start with really understanding what the facts and what the numbers really mean.
I love the community at Andersen. Everyone helps each other.
We have a really special group of people here. I've always felt really supported. I feel lucky to be a part of this team.
Thank you for joining us. We're looking forward to the journey ahead, and we're just getting started.
Congratulations again to Andersen. We will await that debut trade here on the New York Stock Exchange later today. Yahoo News has launched a new offering called Your Daily Digest, but it isn't just any type of news update. Yahoo says the feature is powered by AI and delivers a personalized 6 to 8 minute summary of the day's top stories curated for each user. Joining me now with more is Kat Downs-Mulder, GM of Yahoo News. Kat, great to have you on the show this morning, joining us from our nation's capital. What more can you share about your Daily Digest?
Great to be here. Thrilled to be here talking about your Daily Digest, which is a new AI-powered feature that delivers a summary of your top news topics every day directly in the Yahoo News app. So if you download our app and you come into it between 12 and 5 each weekday or each day, you're going to get a personalized view of the top 3 subjects that interest you, summarized in a short briefing. Extremely convenient to listen to. We're really launching this feature now as audio consumption continues to grow, particularly among younger and mobile-first audiences who really want flexibility in how they consume news. So we're really focused on building daily habits, and this audio feature is an important part of that strategy.
Talk to me more about the value that this particular Daily Digest brings for your users.
So we know that people are busy, they're on the go. There's a tremendous amount of content out there, just so much that it's really hard to keep up with. So what we want to do with this briefing is create something that's easy to access, maybe when you don't have time to read, when you're on a run, when you're on a drive, when you're cooking, getting ready to start prepping for dinner. And we want to make it easy to catch up on all the topics that matter to you. So this briefing takes the top 3 topics that you read about, surveys all of the articles that are coming out about that topic that are popular, and summarizes it into a personalized briefing. This helps you catch up in a very quick and easy way when you don't have much time or you're on the go. It really fits with our users' habits of listening more. Audio consumption is really growing and in demand, particularly among younger and mobile-first audiences. So we're really excited about the way that this product fits into people's lives. And as a broader part of our strategy, audio is an important way to sort of build those deep daily habits that keep people coming back into our app.
Yes, your daily digest. I like it. Now, a lot of companies, Kat, we know, and publishers are experimenting with AI. The architects of AI, Times Person of the Year, for instance, in 2025. How is Yahoo using AI differently?
Yeah, well, at Yahoo, we're using AI to drive product innovation and create great experiences for our users, really pairing the technology with human curation. That part's very important to us. It's not just AI alone. It's AI empowering our editors and journalists to deliver relevant and engaging content. You know, as a leading aggregator with a high volume of content, thousands of articles a day from hundreds of publishers partners, AI really gives us the ability to facilitate finding that signal in the noise and guiding our users to the content that's really relevant to them. In the case of your daily digest, we're using AI to transform existing content. So taking it from a written format to an audio format that really helps people stay informed in moments when reading isn't possible.
How does your daily digest fit into Yahoo's broader roadmap for audio and AI across its suite of products?
Yeah, so we really want to meet people where they are, as I said, starting in the morning. We have a product called the Morning Briefing, which we launched recently. Your daily digest builds on that with a lunch and afternoon product. And soon we'll be launching an evening briefing. So we really want to be there for you from morning until night, helping summarize the news and get you engaged in a way that's really convenient for you. So this is a core part of our strategy. It reflects how we're thinking about audio as a full end-to-end experience across Yahoo, just really allowing us to serve our audience at different times of day. More broadly, audio is a key part of how we're using AI to transform high-quality content into formats that fit people's lives a little bit better.
Talk to me more about what's ahead for Yahoo in 2026.
Well, on the audio front, we're really excited to roll out our evening briefing, which I mentioned. And looking ahead, next year is going to be a huge year for us. We're going to keep experimenting with AI, keep focusing on features that help people catch up and keep up with the news that they need to know and they want to know, and really focus on rolling out new products in weather and games, which are 2 really big areas for us. Just really focus on building products people return to every day, find value in, and help them navigate this increasingly busy digital world and find the content that matters to them in the ways that are most convenient to them.
Kat Downs-Mulder, GM of Yahoo News, joining us this morning from Washington, D.C. Kat, thank you so much.
Great to be here. Thank you.
Yes, great to have you. All right, everyone, you might have heard the audible cheers down here on the floor of the New York Stock Exchange. They are for Andersen, and in just a moment, we're going to take you live to that opening bell podium. Andersen set to open the equity markets as it celebrates its IPO here at the New York Stock Exchange. The company provides tax, valuation, and financial advisory services to clients, individuals, families, businesses, and funds. Andersen says its presence spans more than 180 countries, delivering solutions in over 1,000 locations with more than 3,000 partners and 50,000 professionals. Well, last night, the company announced that it raised $176 million after pricing its IPO at $16 a share. That was the high end of the range. And doing the honors of ringing the opening bell this morning is Andersen's global chairman and CEO, Mark Vorsatz. You hear the cheers behind me. Later in today's show, NYSE content creator Ashley Mastronardi will speak with Vorsatz on the floor about the decision to list here at the NYSE and, of course, the firm's big goals for 2026. As we look to round out 2025, let's take a look at the opening bell podium.
It's truly an honor and privilege to actually stand here today. When NYSE was founded, our mission was clear: to provide comprehensive wealth management services. Over the past 15 years, we have stayed true to this mission. What truly drives us is our vision to become the leading wealth management brand for the global Chinese high net worth individuals. As we celebrate this milestone, we remain deeply confident about the future.
Welcome back to NYSE Live, everyone. We are off to the races. Andersen opening the equity markets here at the New York Stock Exchange as it prepares to see its shares debut for trade. We're going to hear from the CEO in just a few moments once he gets down to the trading floor after ringing the bell. We do see the equity markets opening fractionally higher. In fact, the Dow up 0.4%, the S&P 500 up by about 0.1%. I do want to bring in a guest to talk more about these markets. Tom Bruce, he's macro investment strategist at Tanglewood Wealth Management. Tom, great to have you on the show this morning, especially joining us down there in Houston, Texas. What do you make of the market at these levels, including what seems to be a broadening out into more of these cyclical sectors as we see by the Dow's advance today?
Morning. Thank you for having me. So, as a whole, we're pretty optimistic about the market going into next year, but there's a few factors at hand that could kind of constrain things going forward. We've had a series of good years, and it doesn't mean we can't continue having another good year. But if you look at where valuations are at now, there's a number of studies showing a low long-term expected return, maybe even -1. So it doesn't mean that 2026 is going to be a bad year, but over the long run, some kind of lower return going forward wouldn't be a big surprise. That said, there are a number of tailwinds going into 2026. We still have one big beautiful bill that should broadly contribute to growth, and the rollout of AI, the investment into AI, should continue to really help the economy, broadly speaking, going into next year.
So I do want to ask about what this means for someone's portfolio. Tom, how are you advising clients, or what are the conversations that you're having with them with this expectation as to how they should be structuring their investments into 2026?
Good question. Well, from our perspective, it looks to us like there may be more of a rotation going into more the value type names instead of the high growth names that you've seen to perform so well in recent years. Aside from that, though, as you have more of this rotation going on, there may be elevated volatility. Another factor that we're weighing seriously is a potential rise in interest rates going into this year. I'm not talking about the federal funds rate. We may have another cut there, maybe 2 cuts. So we'll probably finish the year maybe slightly lower or flat to where we're at now. But on the long end of the curve, there could be some pressure going forward, and that will originate from a lot of global debt issuance. Countries around the world are issuing debt, not just the U.S. And you're seeing yields rise in countries like Japan that are spilling over into the rest of the world. So you're getting higher rates because of that, coupled with all this AI investment and the capital needed to go into that. In previous years, it was financed through company operations from hyperscalers, but as they have to turn the debt markets, starting in 2025, but going into 2026, all that aligns for a lot of pressure for the long end of the curve, perhaps going forward.
We've been talking a lot about artificial intelligence, and we saw the AI space companies, especially in the semiconductor industry, exposure to data centers, things of that nature, because we know so much power is needed to generate this AI play. rebound and lead, in fact, with double-digit gains since that April low earlier this year. We're back to near record highs on the major indices, but we are starting to see a rotation, as you've referenced, into some more of these cyclical stocks. I'm just curious, as we look at the AI trade and companies across the board leaning into AI, what does that mean for the economy, especially as the jobs market has shown signs of cooling this year?
Well, as a whole, I still think it's very beneficial for the economy. The jobs market itself is kind of a mixed story because the productivity gains that we're likely to get in the future, maybe not this year, but looking out for the remainder of the decade, we'll probably start to see productivity pick up. That could weigh on jobs. That's true, but as a whole, all the investments going into new data centers, it's already affecting the real economy in a meaningful way. And I do think as you get productivity picking up as it's rolled out more, as it's integrated better into company operations, then you should begin to see a greater impact on the overall economy.
Tom Bruce, macro investment strategist at Tanglewood Wealth Management. Tom, thanks so much for joining.
Thank you for having me.
All right, everyone, stay with us because up next, Andersen CEO Mark Vorsas is going to join our Ashley Masternardi down there on the trading floor. You're taking a live look of the action right now to talk more about his company's milestone.
Real estate is a major asset class, yet there is little visibility into loan dynamics. At ICE, we're bringing new data, technology, and fixed income expertise to capital markets, creating transparency into residential mortgages to better anticipate loan prepayment, defaults, and losses. Transparency, price discovery, innovation. Mortgage data happens here.
Across global markets, data underpins every decision that is taken. At ICE, we provide quality data and analytics across multiple asset classes, from fixed income, energy, commodities, and equities, to areas like climate risk and the entire life cycle of a mortgage. To help inform trading decisions, our pricing and reference data covers millions of instruments. In fixed income, our data can help reimagine your workflow. In energy, our oil and natural gas data is used by global traders, while our energy transition data helps navigate the shift to a low-carbon economy. In mortgages, our data covers the life of a loan, from origination to secondary markets. We can meet your data needs wherever you are. Whether it's pre-trade analytics, pricing, or post-trade reporting, our data can offer a foundation for sound decision-making, helping market participants to manage risk and spot opportunity.
Welcome back to NYSE Live. This fall, leaders from across the fintech ecosystem gathered in Las Vegas at this year's Money 2020 USA conference. JD Durkin was on the ground and spoke with several executives, and here's what Acrolus co-founder and CEO Sam Bobley had to say about his firm's place in the space.
For sure. So Acrolus is a vertical AI company that focuses specifically on lending. We help make the lending process faster and more efficient. Our software automates the underwriting process, and our specialty is small business funding and mortgage lending.
What are the biggest opportunities in the small business funding ecosystem that you're seeing today?
The biggest opportunity is to just get more small business owners funded faster. Historically, small business owners have had trouble accessing capital from banks. With the rise of cash flow-based underwriting and fintech lenders, more Main Street businesses like pizzerias, nail salons, and florists are able to access capital faster. And we think that's a great thing for the overall ecosystem that Acrolus is playing a small role in helping to facilitate.
I'm sure you're in active communication with a lot of these small business owners. Tell me more about the pain points that they're experiencing trying to go to the larger institutions and undoubtedly facing a lot of challenges in doing so?
For sure. So we are a B2B2C company in the sense that we communicate directly with lenders, and the lender's customer is the small business owner. So indirectly, we do service the small business owner. The two biggest problems that business owners have are speed and cost of capital. Going to a traditional bank, it's a slow process to get access to capital, and many smaller businesses don't qualify for those loan products. With Acrolis-enabled underwriting, small business owners can get very fast decisions, often in 24 hours or less, in some cases even instant decisions, and they can get access to capital that they otherwise wouldn't have been able to obtain through a traditional bank.
How has the landscape overall shifted, and even just the last few years? I'm having so many conversations with people in your position who say the general regulatory framework and conversation has changed so much already in 2025. I can only imagine for the years that you've been involved with the company, you've seen a lot of regulatory changes, and I imagine quite a bit of difficulty maybe trying to keep up with all of the changes.
We've seen tremendous growth in this industry. I mean, we started in small business funding in about 2016, and over the last 9 years, the industry has really taken off. I think, if you look at the origination volume of industry leaders like Innova and PayPal, they're really able to distribute a large amount of capital to small business owners. More recently, we've also seen the rise of platform lenders like Shopify or Square, who have embedded capital experiences that might make it much easier for small business owners to access capital. So the ecosystem definitely is changing, and we're excited for continued momentum.
In what ways are you using AI? I wouldn't be doing my job if I didn't ask it, but I'm sure in terms of the automated, maybe the client relationship directly, how are you leveraging the new technologies?
For sure. So AI has been a fundamental part of Acrolis' strategy since day one. Our core platform analyzes financial documents like bank statements, pay stubs, tax forms, and so forth. And we do that using a series of different AI technologies. So we build model orchestration technologies that allow us to plug and play the best available AI models for the task at hand. However, importantly in financial services, customers need highly accurate data. So we don't just pass through models directly to the lender. There's a risk of hallucinations or errors in the data. We layer in a series of industry-specific validations and checks to ensure the data is accurate before it's used for a financial decision. So one component of the AI stack is reading documents with over 99% accuracy. A second piece, which is very fascinating, is fraud detection. So fraudsters are getting more sophisticated. One negative of the new AI tools is it's easier to create fake documents, fake identities, and so forth, and our technology helps to combat that. So we look at documents and we run a file tampering detection process to see if a document is synthetic, if it's photoshopped, if it's manipulated, and it's one of the most rewarding part of our job is to catch fraudsters in their tracks and not let fraudsters access capital and then vanish off the face of the earth. So combination of document capture and fraud detection are key to our AI strategy.
To that point of that AI strategy on capture and fraud detection and beyond, what is your outlook here, not just for the remainder of Q4, but into 2026 as the underlying technologies are continuing to change? But to your point, it's not just the so-called good guys that are leveraging the technology. You got to stay one step ahead of the bad threat actors out there as well.
Look, we're investing heavily in this area. I think it's critical for companies like Acrolis to invest on the good side of this equation, because fraudsters absolutely are always innovating and thinking of ways to game the system. So if lenders put the appropriate safeguards in place using companies like Acrolis, companies like Plaid, other companies to help verify information, it helps to make it more difficult for fraudsters to get through the hoops. So that's the role in the ecosystem that we're trying to play.
Etsy was founded on a simple but powerful idea that technology can actually help to forge human connections and make us feel more connected in commerce. And I think there's no place more appropriate than the New York Stock Exchange for Etsy to begin trading. This does mark the beginning of an exciting next chapter for Etsy. We are so excited to now be listed on the New York Stock Exchange. It's a marriage made in heaven. This day is for all of you to celebrate the future as we continue on our mission to keep commerce human.
It is my honor to welcome Phoenix to the public markets.
This is the beginning of our next phase of the journey, and we look forward to supporting our students and taking them to newer heights.
We're pioneering the area of higher education, and so we look forward to this opening far more doors for us as we proceed on this next path of our chapter. I am absolutely thrilled to be part of the NYSE community.
We're just happy to be here on this momentous day with the New York Stock Exchange.
We'll continue innovating, we'll continue pushing the boundaries of the asset class, and we are on a path to transform the entire investment market. So let's go ring that bell now. We have a team of 125 people. It's the culture of firsts that drives this company, and you are behind it. For 12 years now, we have innovated in every year of our existence. GDLC is one more step in that direction. Not only shaping the asset class, but inventing the asset class. This is just the beginning.
Welcome back to NYSE Live. At Money 2020 USA in October, Wise Platforms head of partnerships for North America, Ryan Zagone, told JD Durkin how his firm is helping enterprises make instant payments. Let's take a look.
Yeah, so at Wise, we've built the best way to spend money internationally. Over the last 14 years, we've invested in infrastructure that allows us to do instant payments around the world. About 70% of our transfers are instant. This gives a wonderful user experience and allows people to send money faster and easier than ever before.
Why do you have the sense that so many leading banks, enterprises are eager to partner with you in terms of gaps or things that may be otherwise missing in the marketplace that they recognize you provide at Wise?
Yeah, at Wise, we deliver certainty in our transfers. So we guarantee the delivery amount before initiation. We show transparency in fees, so you know exactly what you're paying in fees before you send your transfer. This revolutionizes the experience when you pair it with an instant delivery time. So you have speed, certainty, and transparency, really transforming the way a payment feels when you're sending money internationally. The partnerships we're getting at Wise Platform, this is our newest business line that allows us to expand our infrastructure to third parties, banks, technology companies, corporates. They're coming to us because they can get 14 years of investment in this infrastructure and a single API integration. That's really like unlocking a lot of innovation that they can do and that we can deliver.
For anyone who does not frequently send money or receive money across the world, what have been the biggest hiccups, the biggest challenges to effective cross-border payments?
Sending money internationally in the past has been very difficult. Like to send money overseas, it usually takes about 5 days. So it's 5 days in a black box, like where your transfer is, how much fees are being taken out. You don't know the amount of money that gets delivered. So this makes for a lot of uncertainty in your transfer that Wise has really revolutionized in the speed, transparency, and certainty that we're delivering today.
We've seen a lot of change in terms of cross-border payments and the general ecosystem, things like bill pay, payroll, and cash flow. Talk to me about a few of the key drivers, the real main factors that's driving product development in those spaces.
Yeah, when you think about bill pay, you're paying a bill overseas, you need to pay the exact amount of that bill. Like if it's your cell phone bill in Germany, if you're a military or a contractor working overseas, you need to pay the exact amount. That's very difficult to impossible with traditional cross-border payment. So what we've enabled through Wise is guaranteed delivery amount on these international transfers. You can pay a cell phone bill overseas. You can pay a friend for a reimbursement to the exact cent that you need. That really unlocks these new use cases and a better user experience.
Small business banking is so crucial to those entrepreneurs who have started a company. How does the fintech partnership component play a role to make that banking process a lot better for small business owners?
Yeah, when you think around the 14 years it took for Wise to build this infrastructure, that's a long time and a lot of investment to deliver this type of experience. We spent about $3 billion over the last 14 years building our platform. Getting access to that with a single API integration unlocks a lot of efficiency and innovation for a partner. They don't have to go on that same building journey. Now, Wise has the leadership role today, the leadership position in delivering instant payments. We've committed to invest over $2 billion in the next 2 years to further that lead. So it's speeding up payments further, expanding our reach to new currencies, delivering more UX innovation.
What do you look for when determining the right partners to do business with?
We're looking for partners that also want to be best in class. So to pair what we've built at an infrastructure level to user experience, to looking to how they can deliver more value to their customers in unique ways. Now we've seen early adopters in this space. Last year we announced our partnership with Morgan Stanley, Standard Chartered, and now Nubank, the largest digital bank in the world. So we've landed these tier 1 partnerships where we're really revolutionizing what we can deliver to customers.
And finally, how do you see the small business landscape continuing to evolve, not just for Q4 here in 2025, but for next year, 2026 and beyond?
Yeah, the small business space, we're very optimistic for it in 2026. Like unlocking payments reduces the biggest hurdle to international commerce for a small business. Like international payments become the biggest blocker for a small business today trying to do international growth. So now we're lowering that hurdle, unlocking some potential new markets for customers.
For Amira, this listing being here on Wall Street represents a strategic evolution. This is a special moment. Amira is a North American energy leader with 7,600 employees serving over 2.6 million customers through the regulated electric and natural gas utilities and the related businesses and assets that we own and operate. This milestone reflects your commitment to service, to safety, and to operational excellence.
Really appreciate the stock exchange and the partnership that we have. We're going to be back next year. We're going to make it bigger. We're going to do it in this room.
Off the muscle, I ain't got a tussle. All these rings like I'm Bill Russell.
True sports is not just entertainment. It's more than that. It can be a massive business. It can take athletes to entrepreneurs. You're influencing an entirely new marketplace.
Sports is really big business, and you guys are obviously a main driver of this. So really appreciate all of you.
We're here at National Safety Bus Week. As a mission every day, we think about the experience of our students and how do we take them to school safely. And if you think about safety, safety is about people. We provide at First Student 5.5 million rides per day.
We want to build technology that helps make the world safer, more efficient, more sustainable. And those kids are what we care most about. We want to keep them safe. We want to make our communities safer. And we're looking forward to years and years of partnership ahead. But today, let's celebrate.
Welcome back to NYSE Live. Andersen rang the opening bell earlier to celebrate its IPO here at the New York Stock Exchange. And I do want to send things down to the trading floor where Ashley Masternardi is standing by with a very special guest. Ashley, good morning.
Good morning, Kristen. Andersen says they don't want to be the biggest firm in the world. They want to be the best, and they are one step closer today as they IPO on the New York Stock Exchange. Joining me now is the man who made it all happen, their chairman and CEO, Mark Vorsatz. Mark, welcome to the New York Stock Exchange.
Thank you, Ashley. It's an honor and privilege to be here with you.
So today is IPO day. You said you've been involved in other IPOs, but it's very different when it's your own company. How does it feel to IPO today on the New York Stock Exchange?
I would say, it's been a collective effort on the group of our partners, and I think everybody's very energized about it. It's another building block in the strategy that we're pursuing to achieve our potential as a group of professionals.
All right, and Andersen provides tax valuation and financial advisory services. Can you talk about what else you're providing for customers, and who are your customers?
So I would say our customers are, for the most part, are high net worth individuals, family businesses, but we also do corporate work. We do work for funds. We do a variety of work. We're expanding our platform. We have an international network where we have a large legal platform. We have a large valuation platform. We have just started a consulting practice, as you're probably familiar. Andersen Consulting was the predecessor to Accenture. It was simply a name change. We launched Andersen Consulting last summer. We have very ambitious goals about the multidimensional nature of our business.
Why did you decide to go public now?
We're seeing a lot of consolidation in the industry. We started these discussions internally about 2.5 years ago, and we felt that that status quo was not a solution for us, that we needed to do some things differently, and we needed access to capital. But the partners wanted to control the operations of the company, which is why we chose not to pursue private equity, and we thought that an IPO was an excellent solution for that.
All right, and you spoke in the boardroom a lot about Andersen's culture. What stands out to you about it?
I would say it's the attitude that we have about our people. Primary motivation for doing this is to make this a better place for the next generation. Stewardship is kind of a guiding principle for us. I would say it's very embedded in how we go about things. So if I were to step back and say, what's the greatest asset we have? It's our people. We're in a people business, and the culture and nurturing those people is really a key component of why I think we've been reasonably successful.
You started out as Wealth and Tax Advisory Services, or WTAS. You are Andersen today. Can you talk about your journey to today?
Sure. Well, we started in 2013 at building an international network. We felt for us to achieve our potential as a group of professionals, we couldn't just be a U.S.-only firm. So we've actually built out affiliates now. I believe we not only have the largest professional service platform through affiliates, but the largest of any company. So we're in over 180 countries. We have over 1,000 offices. We've now built it out to where we have over 53,000 people. And we hope that many of those groups will join us now that we're public in integrating into the public company. So we really are excited about, this is just the first step in the journey as to what we think we can achieve as a group.
All right, Mark Vorsatz, Andersen Chairman and CEO, thank you so much for joining us at the New York Stock Exchange. Kristen, always an exciting morning during IPO days here on the floor. I'm going to send things back to you.
Ashley, great job. Yes, great to hear, of course, from Andersen's CEO there. That company raising $176 million after pricing its IPO last night at the high end of the range at $16 a piece. A reminder to our viewers, you can catch us each weekday morning on all the streaming services that you'll see on your screen there. We are live 9 to 10 a.m. Eastern, Monday through Friday. We got a closing bell show called Taking Stock, too. We hope you'll watch today. We've got more in store, including hearing from the closing bell ringer. We'll see you back here tomorrow morning.
We're here to celebrate where we've come from for the last 233 years. Today is a new chapter. Today is a new age. And I think you'll agree that the new chapter is getting off to a good start. The right idea, the right approach, and the right technology will get rewarded in any market.
We can change the outcomes of people's lives everywhere.
The leap of faith, the vote of confidence, that is why we're standing here today, getting ready to ring the bell on the New York Stock Exchange.
Innovation, space, defense, national security is great, but our mission is you.
And what we're building is really, really important for the future of humanity.
In an era of unprecedented technological advancement, companies like Voyager don't just adapt to change.
Rest assured, this is a milestone. It's an important one, but we're just getting started.
It's not the finish line. We have a lot of work to do, a new battle to continue to be waged.
So Voyager's future, best days lie ahead of us, not behind us.
The belief that every individual has the right to build a dream, to live peacefully, that is what Voyager's mission is. And with that, let's roll.